You own a property and you've owned it for quite a bit of time. And now you're thinking, where is my next chapter going to take me? Should I sell my home? But we know that most homeowners right now stop their brakes when they think about the C word, capital gains tax. So whether you have a primary home and are thinking of selling it but not know your capital gains tax, or you have investment properties and not know how to defer capital gains tax, today we are going to cover all of that information in this video. I'm Gia Silva, owner-broker of INTI Realty here in Long Beach, California. And everything we're gonna cover today in this video pertains to the state of California. However, if you have any real estate needs outside of California and even outside of the country, we can connect you to the right partner that can walk you every step of the way. So let's dive right into it. First, we're gonna cover primary residence. If you lived in your home for quite a while and it has been your primary residence, know that when you sell the home, you have an exclusion of $250,000 in gains if you've owned it by yourself. If you've owned it as a married couple, you have $500,000 of exclusion, again, if it's your primary home. When selling your property, any equity that you net that surpasses those amounts is subject to capital gains tax. To know the capital gains percentage that you would be paying, it's important that you consult with your CPA. Now, if you own investment properties and you're thinking of selling, once you sell, the whole entire gain, your equity, is subject to capital gains tax. Throughout the years, most people that have rental property have used a 1031 exchange to defer capital gains taxes. If you're unsure of what a 1031 exchange is, it has pretty much been created to be able to help property owners that have rental properties defer their capital gains tax, which means that when you sell your rental property, all of the net proceeds would be rolled over to another property that you purchase. Now, to clarify, you are not avoiding capital gains, you are simply deferring, and you're deferring it by buying another property through this 1031 exchange. Now, when you sell that next property that you've purchased through the 1031 exchange, you will be subject to capital gains tax unless you do another 1031 exchange. If you want to know more about 1031 exchanges, make sure you watch the video covering everything you need to know about 1031 exchanges down below in the description. Okay, now let's get back to deferring capital gains. So you're a property owner, you have rental properties, and you want to sell because you don't want to be a landlord anymore, but you also don't want to pay capital gains tax. Because I'm speaking to property owners every single day that own rental property, I'm realizing that most of them don't know about seller financing. Have you heard about seller financing? What is it? Let's talk about it. Seller financing is exactly that. You are a seller and you are going to be holding the note, the deed of trust, the mortgage for a buyer that's going to ultimately buy your property. Now, you are no longer the owner of the property, so the buyer will now be the new owner and you become their bank. Now, I know what you're thinking. Is that even legal? Can that get done? And how are they gonna pay me? It absolutely is legal. It has been happening for quite a bit of time now. And the most important part that you need to know is that when you are doing seller financing, just like the lender, you become first position deed of trust, which means you are recorded as the lender into the property. So for any reason, if the buyer, the new owner, is not paying you, just like the lender, you can start foreclosure proceedings. Okay, so let's go a few steps back. I'm sure that you're thinking, well, it sounds like there's definitely some pros to this, but I'm sure there's also some cons of seller financing. So some of the pros are that you are deferring capital gains, you are collecting interest, and you are no longer a landlord. So you don't have to attend to any repairs or anything about the property. Some of the cons may be that when you're offering seller financing, the buyers may not have a substantial amount of down payment to help you pay an outstanding balance on your mortgage, if you have one. Another point that may be considered a con is that you're gonna have to do your due diligence as to who you are lending money to, who you're holding the note for. And you have to consider future capital gains tax when that buyer pays off the loan. Okay, let me get the whiteboard, draw some examples. Okay, so for the sake of simplicity, we're gonna use an example, a purchase price of $1 million. Now let's just say you still have a mortgage balance on your property of, let's say, about $200,000 that need to be paid off. When you are doing seller financing, you're going to have to satisfy the mortgage balance that you have on your property. So you are expecting a buyer to at least come up with a down payment that's going to be sufficient enough to pay off your mortgage balance. Now, as we're drawing this example, another con may be that you as the seller were counting for much more liquid when thinking of selling your property. But if the buyer only has a certain amount of down payment that won't allow you to liquidate enough, that may be a con to you and you may not want to do seller financing for that particular buyer. Now, let's just say that the buyer that is looking to purchase your property that you are thinking of doing seller financing for comes up with about 25% down payment. 25% down payment of $1 million is $250,000, which means that amount will be enough for you to pay your mortgage balance of $200,000 and still have a little bit left over. Now, if you're like most homeowners right now in America, you probably already have more than 55% of equity, if not own your property free and clear. But for this example, let's continue to assume that you're financing to this buyer that has come up with $250,000. Your sales price is $1 million, you're paying off your mortgage balance of $200,000, and now you can hold a note for the buyer for $750,000. All right, Mr. or Mrs. Seller or Mr. or Mrs. Bank, now you're holding the note for $750,000 for a buyer, and you have the ability to set your own interest rate that you will be offering the buyer, as well as any loan terms. You decide what the interest rate will be. You decide whether that buyer is paying towards the principal and interest, or is it going to be an interest-only loan? And you also decide when that loan will be due for the buyer. Okay, I don't need this anymore. Just imagine, not only are you helping yourself in your own financial situation by learning ways with this real estate hack to defer capital gains tax, but you are contributing to our industry as a whole. You're contributing to the inventory crisis that we have right now. There's not enough properties on the market. When seller financing is happening, now you are actually selling a property, creating more inventory, and at the same time, allowing buyers to be able to afford a home. And if you have more rental properties, just imagine how many more buyers you will be able to help afford a home. Now, the seller financing option is available to every homeowner. So whether you have those investment properties where you're trying to defer capital gains, or you have your primary residence that you've been thinking about selling but not know what you're gonna do with all of the net proceeds that you cash out, you can still do seller financing, hold the note, hold the mortgage for a new buyer, and defer capital gains. So there you have it. Let's recap. The #1 real estate hack this year in 2024, and I would say for many years to come, is seller financing, where you hold the note, hold the mortgage for a new buyer, and get to set your own loan terms while deferring capital gains tax. If you want to know more about how this can get done, the right forms, the right paperwork that are going to secure that note, that mortgage that you will be holding on the property that you sell, make sure that you get in touch with us so that we can walk you every step of the way and see if this is the best option for you. Just remember that seller financing is available throughout the whole entire country. So if you have properties outside of California and you're wondering if this would actually be a really good option for you to hold a note for a buyer, know that we can connect you to the right partner, the right real estate professional that works just like our team to help you throughout this whole entire process. And if you're anywhere in California and want to know more about your specific situation, make sure to give me a call at the number below or send me a message. If you've enjoyed this video and found the information valuable, make sure to like, subscribe to my channel, comment below, and reach out to me for any questions that you may have. See you soon.